Hello everyone, welcome to yet another episode of Market Decoded with Anant. So today we will be discussing about the charts that formed in Nifty. So yesterday we discussed that Nifty formed a very unreliable pattern. So it was very difficult for us to ascertain whether it is a bullish position or a bearish position. So now that the stance has been clear, let's look out on how the chart has been formed. So these are the trend lines that we have already made. This is 14 EMA, then this is some of the Fibonacci series plotted by me, and then this is the 40 EMA. If you clearly look out, this trend line has been broken, which was earlier acting as a support, and the closing of this daily candle is below 14 EMA and then taking a support of 40 EMA. So right now the stance has changed, it has now been bearish, so we can expect some bearishness going further tomorrow as well according to this chart. But let's look out on how the other metrics are standing out. So over into the OI charts, if we see, there has been call OI that has been standing across on 24,000, then 24,200, then 25,000. 25,000 is clearly of very little importance because it is first of all, it's a psychological level that usually call writers will be selling, and then same would be the stance for 23,000. So according to me, these two strikes are of not much relevance. So this is one of the support 23,500, then this is 24,000, and then this is the major support of 24,200, which is the highest one, and then we have this little support at 24,500. So looking at the OI charts, we can conclude that there has been a more support on the call side than on the put side. So this is also indicating that the markets will be going on a bearish side tomorrow or maybe throughout the week. But let's look out on how the OI charts change on a daily basis. Now let's look out on how the FIIs have closed the position, or what is the data saying. So FIIs have holding a strong bearish position on index future and index option both, and if we see upon the client side, which is the retailers, we have the strong bullish side. So this is completely opposite. Usually it has happened like that, and pro are mild bullish. Pro is, I would say, indecisive. So strong bearish and strong bullish. So we can expect again the market to close downside tomorrow. So three of these charts metrics are saying that we are going to be the downside. Now let's look out on the technical side that has been provided by the streak platform. So the streak platform again saying that the crossover is on the bearish side long term as well. ATM straddle is already on a very mixed cycle, so we cannot really conclude because the volatility has increased due to the strong downward trend that happened today. So market has clearly respected, one thing to note is clearly respected the 24,000 level. This has been an important psychological level for market. It has bounced a lot of times from here. It has taken as a support, taken as a resistance. So this support would be crucial to see on how it will be panning out in the next few days. I believe that the next important level support for market would be 23,800, which is this level, and we can expect the candle to open it from here, and then maybe slide down to here maximum. But it could be a doji as well, because obviously we cannot really predict on how the movement would be, but the stance would be bearish. So this is all I have for today. I hope you enjoyed the session. I wish you all the best. Happy trading.